Hello and welcome to this afternoon's financial literacy webinar. My name is Justin Martin. I'm a partner at BDO, a chartered accountant and a colour accounting facilitator. Joining me today are two colleagues, Nikki and Tanea, who will be assisting with the question and answer function. I'm going to hand over to each of them now to introduce themselves on video. Nikki, sending you live now.
Hi everyone, Nikki Rogers from Service IQ. I'm the Travel and Tourism Sector Manager, and I also work with Justin and the BDO team to bring colour accounting to all of New Zealand in the form of workshops. So looking forward to today's webinar, and I'm sure you'll get a lot of insights out of it. So welcome.
Thanks, Nikki. Tanea, sending you live now.
Hi everyone, my name's Tanea. I am an accountant at BDO with Justin, and I've just started my training as a colour accounting facilitator. If you guys have any questions, pop them on the Q&A and we are more than happy to help you. Thanks.
Great, thank you, Tanea and Nikki. Before we get started, we wanted to shout out to all the businesses out there who are doing it tough, and also say a massive thanks to the essential workers who have worked through lockdown. BDO and Service IQ want to help Kiwi businesses get back on track. And today's workshop is all about upskilling and building your financial literacy. We'll get to the content very soon, but first, if you're happy to, we'd like you to use the Q&A to introduce yourselves. So find the Q&A, which we will be using throughout the webinar, and please send through your name and the industry that you work in. And Nikki and Tanea will be monitoring and publishing those posts as they come through. Okay, just a few seconds to do that. All right, just 3 bits of housekeeping and then we'll get straight into the content. So first off, we are using the Q&A function today, and please note there is about a 30-second lag between what you're seeing and what we're presenting. So just bear with us as those questions come through. We will be monitoring them and do our best to answer them throughout the presentation. Secondly, we will be sharing with you a number of resource links today. Don't worry about writing those down because we'll provide them to you in an email after the presentation. And last of all, I hope that you've got your A3 sheets printed out. If you haven't got the A3 sheet, hopefully you've got some note paper handy, and you will need a pen to write with. And ideally you'll have 3 coloured pens or pencils. That was green, yellow and purple, and that's the colour accounting colours that we'll get to very shortly. Okay, I'm turning off my video now to concentrate on the slides and my notes, but I will be back at the end of the presentation to say goodbye by video. Nikki and Tanea, are we seeing those posts coming through with names and industries?
Yep, just publishing them now.
Yep.
Fantastic. Okay, on to the agenda then. We've got 60 minutes today, and we will be finishing on time. And there's 2 key sections that we're going to cover off. The first is the 5 components, the building blocks of accounting. And in the second section of the webinar, we will talk about cash flow levers and looking at it from uses and sources of funds. Why are we running these webinars? Well, understanding the numbers has never been so important, and particularly for cash flow. And when you've completed today's session, you should be better equipped to hit the ground running. Moving on to some resource links, there is lots of useful information out there, and we couldn't possibly list it all, but we have got 4 very useful links to share with you, and we will email these out to you after the presentation. So just running through them, Inland Revenue, their website has got all the various tax relief measures that have been recently introduced. Many of you will be familiar with the wage subsidy. So for information and the application form, the Work and Income site has it all. BDO has put together a host of COVID-related resources, including a really helpful frequently asked questions section with good practical answers. So check out our website. And last of all, cloud accounting products are really proving their worth right now. So if you're using Xero, have a look at the apps and add-ons that are available to help out with your business. Okay, just a quick introduction for you on Calorie Counting. What is it all about? Well, Calorie Counting is the one-day course that takes accounting to non-accountants using colour, 3D shapes, and lots of fun. It's been around for 20 years internationally and here in New Zealand since 2016. And BDO and Service IQ are proud to be rolling it out across the country with hundreds of past attendees at workshops and conferences. Today, we're starting with the basics of accounting, and we make no apologies for that. We are assuming that you have no prior accounting knowledge. Today, we're teaching the fundamentals of accounting, and with that knowledge, you will have the foundation to improve your business acumen, the ability to make good judgments and quick decisions, which is critical in a time like now. Three keys that we'd like you to take from today's presentation, and you'll notice that numbers is not one of them. First of all, structure, how a set of financial statements is structured. And when we talk about financial statements, we're talking about an income statement and a balance sheet and how they fit together. Secondly, language. Accounting does use a lot of jargon, and today we're going to try and break that down and use plain language definitions instead. And lastly, movement. We'll show you how accounts go up and down and what impact that has on profit. Okay, on this slide, we're looking at perspective, something that is really important in accounting. And we've got a 3D shape there. And we're asked the question, where is the dot? So Nikki, could I ask for your answer to that one possibly?
You caught me on this last time, Justin. So I see it at the back left, but you kind of re-look at it and then you see it in a different place. So it really depends where you're looking.
That's a very good answer, Nikki. Thank you. So it really does depend on whose perspective you're looking at it from, and the same is true for accounting and financial information. So whose perspective? Is it the owner? Is it the lender? Is it Inland Revenue? So for that reason, we always name the financial statements that we are preparing, and you'll see that when we meet the two businesses today. Okay, on this slide, we're asked the question, what is accounting? And put very simply, accounting is just a way of sorting and organising financial information. And indeed, we organise that information into just 5 categories. Today, we'll teach you those 5 categories, and they never change. It doesn't matter where you go in accounting, you will always find the 5 categories. Okay, the last introduction slide for you, and it's a little bit of history, and then we'll get into the rest of the content. So over 500 years ago, a guy called Pacioli came up with the double entry system of accounting. 2 sides to every entry, a debit and a credit. And today, as accountants, we're still using the double entry system of accounting, and we'll teach you the two sides to each entry using colours today. Okay, Nikki and Tanea, any questions coming through?
No, not at the moment, Justin. There's a couple of people having a few technical issues, but hopefully we're getting on top of those. Not many though, so I think we're all good.
Okay, great. And I can see that we've got nearly 120 people on the call today, so it's great to have so many of you along today.
Fantastic. Great.
Okay, well, we're moving on, and we're now looking at the funding butterfly, which is also known as the balance sheet. If you have the downloaded A3 sheet, we are working in the top left corner of that sheet. Otherwise, get your note paper ready and please draw the butterfly shape like you can see on the screen. If you have your coloured pens with you, we are about to start using them as well, so have them ready to go. Okay, so the first thing that you might notice is that we've got a name for our funding butterfly or our balance sheet. We're meeting our first business, and that business is called Global Retail Limited. And in fact, it is a supermarket business, something that I'm sure we're all familiar with. To start with, we'll be working on the left-hand side of the butterfly, and that is headed up called Uses of Funds. So on the left-hand butterfly wing, I would like you to write the word assets, just like is appearing on the screen now. And you can see we've chosen a picture of a typical looking supermarket to remind you that we're in the supermarket business. Okay, so I'd like to tell you three things about assets, and then I want you to use the Q&A to send through your three assets that you think are the top three assets we'd need to run our supermarket. So first of all, assets are valuable. So please write the word valuable beside the left-hand butterfly wing. Secondly, there are two criteria that assets must meet before we can record them for accounting purposes. First, they must be measurable. And when we say measurable, we mean reliably measurable in dollar terms. Second of all, assets must be under the control of the business. They must be controllable before we can recognise them on our funding butterfly. And the last thing to tell you about assets is that they are a use of funds, and in colour accounting, use of funds is denoted with a green colour. So please take your green pens and trace around the left-hand butterfly wing in green. Okay, I'd now like you to use the Q&A to send us through the top three assets that you can think of that you would need to run a supermarket. So send them through now. We'll give you a few seconds to do that. Okay, well, like a good cooking show, we have got some pre-prepared asset answers that we will talk through. And as we see your answers coming through, we'll do a quick roundup of them shortly as well. So the first asset there in bold is cash. Cash is a really important asset for any business. So if you don't already have that one noted down, please do write down cash under assets. And it's worth making the point that in accounting, everything is measured in dollars and monetized, but assets is the only place that you will find a cash balance. Today we'll talk a lot about cash and cash flow. When we talk about cash, as well as notes and coins, we're talking about electronic bank account balances. Okay, looking at some of these other assets that we've got listed here, accounts receivable. Maybe not such a common asset for a supermarket, But accounts receivable is where we have done some work for a customer or sold some goods and they haven't paid us yet. So we have issued them with an invoice. It's an account receivable for global retail. It is an asset. Looking at the list, we've got equipment, we've got vehicles, buildings is listed there, and our assumption there is that the building is owned by the business. If we were renting the building, it wouldn't be under our control, so it wouldn't be listed as an asset. Stock or inventory, those are both names for products that we sell in our supermarket. Okay, moving on to the last two items that we've listed there, and starting with brand. Brand is really valuable for us, and it is also under our control. However, unless we've acquired the brand from a third party and paid for it, it won't be considered reliably measurable for accounting purposes. And therefore, it is unlikely that we'll be recognising brand on our funding butterfly. Looking then at staff, staff are of course a very valuable asset for our business. They are measurable, we know how much they're paid in dollar terms. However, for accounting purposes, staff are not considered controllable. So staff will not be listed as an asset for accounting purposes. Okay, Tanea, are there any assets coming through?
Yeah, there were plenty. Lots of people had cash, stock, the building, and as you've just pointed out, staff was one of the popular ones as well, which we have just discussed is not actually an asset that we recognise on the balance sheet.
Fantastic. Well, thank you everyone for sending through your answers. That's great. Okay, we're going to move to the other side of our funding butterfly now. So we're looking at the source of funds side of the butterfly and thinking about how we will source funds to purchase all these assets that we would need to run our business. Okay, so you'll notice that the right-hand butterfly wing is split into two sections. In the upper section, please write the word liabilities. And in the lower section, please write the word equity. And one word sums up these two really well, and that word is obligations. So please write the word obligations beside the left-hand butterfly wing. Sorry, right hand. So to define them, liabilities are obligations the business has to third parties. And equity is an obligation that the business has to the owner. Okay, it's time to add some colour. And it's time for yellow. Yellow in colour accounting is for sources of funds. So please trace around the right-hand butterfly wing in yellow. All right, here are some common types of liabilities that you may have in your own business, or perhaps you've heard of them before. So accounts payable. Accounts payable is where a supplier has provided us some goods or services and we haven't paid them yet. We have an account to pay. That is an obligation that we'll need to satisfy in the future. Bank loans and hire purchases. That is where we have taken a loan from a third party and we have an obligation to repay that loan or that hire purchase in the future. And income in advance. Perhaps some of you have businesses where you take things like deposits in advance. That is considered an obligation that you have to a customer at that point in time. Okay, moving on to equity, and just one type of equity we will talk about today. We're using a company structure. It's Global Retail Limited. And so our equity is called share capital. Okay, we're doing well. We're nearly there on this slide. So most important, we need an equal sign in the middle. Our uses of funds must at all times equal to our sources of funds. And just to put some numbers on this, if we had $50,000 worth of assets, we had a $30,000 bank loan, we would need $20,000 of share capital contributed by the owner. And that brings us to the accounting equation, which is assets equals liabilities plus equity. So that there is the first three categories of the 5 we'll teach you today: assets, liabilities, and equity. If there's any questions on the funding butterfly, please do send them through.
Oh, hi, Justin. I've got a good question here. Someone has asked, what's a good example of equity for a not-for-profit?
Very good question. So in a not-for-profit, depending on the type of structure that you are using, you might be calling your equity accumulated funds or reserves. So very good question. Okay, well, let's move on to the next slide. And we're looking at something called the basis framework. This is a nice play on words. Basis, because it's the basis of everything that we do in colour accounting and indeed accounting. And basis, balance sheet and income statement framework. So we're meeting our second business today, and that business is called Global Consulting Limited. If you're on the A3 sheet, we're now working on the lower half of the front page. If you're drawing on note paper, please draw the outline that you can see the 5 boxes on the screen. And then, just like we did on the funding butterfly, let's add some keywords and colour to this before we get started. So the top left box should be headed up assets, and assets being a use of funds should be highlighted in green. On the right hand side, the top box is liabilities and the lower box is equity. And being sources of funds, liabilities and equity should be highlighted in yellow. And remember our key definitions: assets are valuable things for a business, and liabilities and equity are both obligations that the business has. Okay, we're now all set up with our balance sheet and we're ready to record some transactions for this business. We're going to be recording the dollar movements into what I call buckets. And you can see in the equity section, we have a bucket set up called share capital. So please draw the share capital bucket into your equity section. Okay, now that we've got that ready, we will have some more buckets coming through. So let's have a look at this. Under assets, you need a nice good sized bucket called cash. And under liabilities, you need a bucket called bank loan. So we're a brand new business called Global Consulting Limited, and we've drawn up a business plan all ready to start and take to the bank, requesting that they may grant us a $30,000 bank loan. And yes, the bank does agree to do that. So to record that entry, as you can see in the buckets on the screen, our bank loan bucket increases by $30,000. That's our obligation to the bank. and our cash bucket increases by $30,000. Okay, we've got another entry for the balance sheet. In this case, we're asking the owner of this business, the shareholder, to contribute $20,000 of share capital. So they say yes, they agree to, and they pay $20,000 into the business's bank account. So $20,000 increase in share capital and a $20,000 increase in our cash bucket. So we're all in balance so far, $50,000 in our use of funds and $50,000 in our source of funds. And we're ready now to start trading our first day of our new business. Okay, so we're going out to see our first customer. We've done a day's work for them and they're going to pay us $700 in cash. So in your cash bucket, please write $700 and increasing. It turns out that this was a job out of town and we did need to hire a car for the day, and that cost us $300. So let's show that $300 decrease in cash when we're paid for our hire car. Okay, Tanea, 2 questions that you might be able to help me out with.
Yep.
First question, how much profit did we make from our first day in business?
I'm going to say $400.
Fantastic. So we had $700 of income, less $300 of expenditure. We made a profit of $400. And second question for you, who does the profit belong to?
It belongs to the business and therefore indirectly to the owner of the business.
That's correct. So profit belongs to the owner and it appears in the equity section. Let's add $400 to our profit bucket, which is in the equity section. Okay, well, we could leave the story of global consulting there because our use of funds does equal our source of funds. However, if we did that, we would be missing part of the story, and that part of the story is the margin information. How much income did we earn and how many expenses did we incur in order to derive that $400 of profit? So we're introducing our last colour with your coloured pens, and that is the colour purple. So please take your purple pens, trace around the profit bucket, P for profit and P for purple, and go right around the last 2 boxes, income and expenses. So if you like, you can imagine that profit is like a folder on your computer desktop. You double click on the profit folder and inside there are 2 subfolders, income and expenses. And profit is just the calculation of the income box minus the expenses box. Okay, we'll add our last bits of colour to this then. Income is yellow because it is a source of funds. Are green because they are a use of funds. And we can now draw in the last 2 buckets. So under income, we need a bucket called sales. And we remember from earlier that our first day we made a $700 sale to our customer. So add $700 increasing to the sales bucket. On the expenses side, we had some travel expenses. So we need a travel bucket and we're adding $300 to that travel expense bucket. Okay, we're nearly there on the basis framework. We just have 2 last things to do. And the first of those is to define income and expenses. So Nikki, I'll get your help on the income one. what is the sound you think of when you think of income?
Okay, you caught me on this one yesterday, Justin, so I'm a little more prepared today. So for Service IQ, the sound of income would really be all our wonderful trainees out there training in their workplaces, developing themselves and becoming more, profitable for the business, more developed themselves. Yep, that would be it for us.
Fantastic. Yep. Thank you, Nikki. And like most of us, when we think of income, our first thought is ka-ching. Ka-ching is the cash, and we know where cash lives. That's in the asset section of our framework. So like Nikki said, what's the sound of income? Well, for a builder, it might be the sound of hammer and saw. For a hairdresser, it's the snip snip of scissors. And you'll be able to think of what the sound of income is for your own businesses. So on that basis, we define income as value generating activities. Income is the thing that we do, the activities we do to earn the ka-ching, which is the cash. So in that same format then, we define expenses as value sacrificing activities. So note down those definitions. Income is value generating activities, and expenses are value sacrificing activities. Okay, the last thing to tell you for the basis framework, the top section, assets, liabilities and equity, is the balance sheet. The lower section, income and expenses, is the income statement. And the link between the two is, of course, profit. The balance sheet is a snapshot in time. It's headed up as at a date. So as at 31st of March or as at 30th of June. And the income statement is headed up for the year ended or for the month ended. So in that way, the balance sheet is a bit like a photograph, a snapshot in time, and the income statement is a bit like a video, a record of all the activities that we did for the year. So there we are. We have taken you through the basis framework, and we have introduced you to the 5 categories of accounting, being assets, liabilities, equity, income and expenses. If you've got any questions on the basis framework, please do send them through, and it looks like Tanea and Nikki are doing a great job of answering those as we go. All right, well, we're at the midpoint of the workshop, so we're just taking a little break from the content just to tell you what we'd be doing in the full day colour accounting workshop, and that is that we'd be moving on to the buckets and tickets exercise, which is a whole lot of fun using the 3D buckets that we set up and posting in the green and yellow tickets, 2 sides to every entry, and watching the account balances increase and decrease and the impact on profit. Okay, we've got an exercise for you to do afterwards, after the webinar, and this exercise is located on the second side of your A3 downloaded sheet. So on there, like you'll see on the screen, we have a set of financial statements, and it's for the business global retail. So something to do after the workshop if you'd like to. Using your coloured pens, we'd like you to apply colour just like we did for the basis framework. So that's using green for assets and expenses, yellow for liabilities, equity and income, and purple for profit. And remembering that profit is the link between the income statement and the balance sheet. Once you've added that colour, you'll be able to use the paint by numbers to complete the business narrative, which is also located on the second side of the A3 sheet. So don't worry about copying the answers down now. We will send these out in the email which will get out to you after the workshop. Okay, we're moving on to the second section of today's workshop, and that is the cash flow levers section. So to recap, we've just covered the 5 categories of accounting, and we're now going to spend the remainder of the workshop doing a deeper dive into one particular bucket, and that is the cash bucket, and how funds flow in and out of that bucket. As we all know, cash is the life force of a business. So understanding the levers that influence cash is really important, especially at a time like now. And broadly, there are 2 types of levers. Thinking in terms of the basis framework, there are uses of funds and there are sources of funds. We'll take you through some examples of each and show you how they work on the basis framework. So if you like, and you've got some spare paper, you could draw up a basis framework and add the entries as we go. If you've got the A3 sheet, you might still have some room on the global retail basis framework where you could note down these entries. Okay, so let's look at the first of these, and thinking about uses of funds. We're going to start with accounts receivable. So what do we mean by accounts receivable? Well, this is where we've done work, provided services, or sold goods to a customer and given them an invoice that they haven't paid yet. It's an account to receive for the business, and it is an asset. We've got some top tips coming up on the next slide to help you manage your accounts receivable. But now let's show you how the entry looks on the basis framework when we record accounts receivable entries. So first of all, we're going to record a sale, and that sale has been made without any cash being received at the point the sale is made. So under income, we need a sales bucket, and today we're making a $700 sale. And we give our customer an invoice. So under assets, we've got an accounts receivable bucket, and that increases by the same amount, $700. What impact does that have on our profit? Well, we've made a sale, our income has increased by $700, so our profit will be increasing by $700. And that is an example of accrual accounting, which is where we record transactions when they occur, regardless of whether the cash changes hands or not. Okay, we now want to show you how to record the entry for when our customer pays us. So when we are paid, our accounts receivable asset will decrease, and our cash bucket will increase. The quicker we can turn our accounts receivable bucket into cash, the better, because that improves our cash flow. So that's the first lever, thinking about accounts receivable. And let's just move on to the next slide and briefly talk through some top tips for managing accounts receivable. So our first tip is that all your invoices that you send to customers are entered into your finance system. Secondly, entering your invoices and sending them in a timely manner should mean that you're paid quicker. Including the payment terms and reference details on your invoice is helpful and useful for your customers so that they can easily make payment to you. Sending statements after the invoice has been sent out as a reminder is a good idea, and using software like Xero or MYOB makes that really easy because processes sending statements can largely be automated. And lastly, reviewing your aged receivable report regularly is also a good idea to keep on top of your accounts receivable. So an aged receivable report, there's an example just come up on the right, sets out all of the invoices that you've sent out by customer and shows you current, 1 month, and then older than 1 month. So monitoring those invoices that have been sent and particularly following up those that are older than 1 month should result in an improved cash flow as those are paid. Okay, so that's our top tips for accounts receivable. We're now going to move on and think about fixed assets. So what do we mean by fixed assets? Generally, these are assets that we use to run our business, such as property, plant, or equipment. So some questions that you might think about is, do we have any assets that are never or rarely used that we could dispose of? You might also think about whether leasing instead of owning an asset might make sense in the short and long term. So let's have a look at how this works on the basis framework. So this business has $700 of fixed assets, and we can see that in the asset section. We decide that this asset with $700 is very rarely used and could be sold. So we put it up for sale for the value of $700 and the asset is sold. So just showing you how that entry would be recorded. Our fixed asset balance decreases by $700 and our cash balance increases by the same amount, resulting in improved cash flow. A couple of points that you should consider when you're thinking about your fixed assets. Any assets that are business critical, it probably isn't going to be a good idea to sell those, so carefully review all of your assets first. And bear in mind, this is really only a one-off solution, because once the asset's been sold, you can't repeat that again. Okay, moving on and thinking about expenses now. Now is a really good time to take a careful look at every expense line item to ensure that it's valuable and necessary. For example, are you paying a premium for some services where a standard plan would be sufficient without negatively impacting your customer service? So in this example, we have a business that usually spends $700 a month on overhead costs. And you can see how that transaction currently looks. Expenses are increasing by $700 and cash is decreasing by the same amount. So now let's assume that we could reduce overheads by $200 a month. So overheads would now be $500 each month and cash outflow would be $500 a month, a saving of $200 each month, thereby improving our cash flow. So that's it for the use of funds examples. We're now going to move to the source of funds side of the framework. And just a reminder here, if you've got any questions on the cash flow slides we're working through, please do send them through using the Q&A. Okay, we're now turning to sources of funds. And the first we'll consider is borrowing. So borrowing from the bank or other lenders may be an option that you could consider, especially with the government's business finance guarantee scheme. If you already have debt, you may be able to discuss possible extension or holiday options with the lender. Tax payments may also be able to be negotiated or deferred using tax financing or negotiating directly with Inland Revenue. However, the most important point from this slide is that eventually debt must be repaid. it is not a long-term solution to continue borrowing indefinitely to fund your business. So let's show you how this would work. Liabilities, we've got a bucket called bank debt, and we're going to borrow $7,000. And that $7,000, the other side of the entry, is increasing our cash by the same amount, thus improving cash flow. What we haven't shown here is the cost of interest, which will have to be paid on this debt, and at some point in time in the future, repayments will need to start being made on this debt, which will decrease our cash flow in the future. Okay, moving to consider another source of funds, and that is equity. So can the owner either contribute additional funds to the business or decrease how much they're drawing from the business? If the owner has invested everything that they have in the business or relies on their full drawing to live, this might not be a feasible option. So to show you how the entries look for this, in equity, we have a share capital bucket. So the owner is contributing an additional $3,000, and our cash bucket increases by the same amount. So that wraps up looking at cash flow levers. We'll now briefly look at some tools that you can use to help forecast your cash flow. So there are lots of tools available to help you forecast cash flow, from good old Excel right through to some very smart programs. Whatever tool you use, we recommend that you prepare a three-way forecast. So what do we mean by this? Well, it's got three components. First of all, a profit and loss, or an income statement to show the profit or loss. Secondly, a balance sheet to show how the profit or loss is funded. And last of all, a cash flow statement to show the cash inflows and outflows. And this is the part that's really vital. So there are two tools that we use, both are Xero and MYOB add-ons, and they allow both of our three-way forecasting. Spotlight Reporting and Futurely, and we will send out the links afterwards. They're also on the screen. I suppose the last point from this slide is that BDO is able to assist with preparing cash flow forecasts. So talk to your usual advisor, or you're welcome to send me an email for more information. Totally optional, but recommended. If you've got time after the webinar, think about which of the cash flow levers that you could apply to your business to help improve your cash flow. And make a list of actions that you could implement now. If you're not sure or you'd like to test out your thinking, my email address is on the last slide, and I would be happy to hear from you. To wrap up, we have looked at the 5 building blocks of accounting: assets, liabilities, and equity, and these form the balance sheet. Income and expenses, which form the income statement. And profit is the link between the two of them. We then moved on and looked at some cash flow levers, uses and sources of funds, including fixed assets, accounts receivable, expenses, borrowing, and equity. Lastly, a reminder about those great resources that are available out there, and we will send them out in an email to you after the webinar. And just to acknowledge that there have been a lot of very good questions sent in to us prior to the webinar, as well as those questions that have been asked during the webinar. So we will be putting together a frequently asked question section to send out in that email that we'll send out after the workshop. Okay, I'll just try and turn my camera on here to say goodbye to you. Hopefully it works today. There we are. So look, thank you everyone so much for attending the webinar today. It's been great having you along, and it's also been a good experience for me presenting a webinar like this for the second time. On behalf of BDO, Service IQ, Nikki, Tanea, and myself, I'd like to thank you so much for joining us today and look forward to hearing from you in the future. Goodbye for now.